Welcome to TradeTheNBI.com. This is John. This report is for the 16th. Well, people said to me, you're crazy if you think volatility is going to be any bigger than it's been. And it's like, well, just look at yesterday. Look at the day before. Look at the day before that. Yeah, you know. So October has been already uh, quite the mover. Now, from an MBI reading standpoint, not so horrible here when you see the magenta is still above and continuing to rise. Shorts not doing much. It's still in a broader soft pattern, but you can see that's starting to turn here as you get the blue about to cross over gray right there, the 1048, 1018 reading. So that's your double confirmation that we're headed back towards the 100% move, even despite all of the scary stuff that's supposedly, taking place as things move around so violently. And that's just because a lot of people just don't understand the direction of things, and that's fine. We'll take advantage of that. From an NQ standpoint, same situation, a little bit stronger from a short standpoint, getting closer to that 10. But, again, you need that MBI white rise to really drive move. In this particular case, you're still seeing cyan and red, and you have the orange caught between. It's a continuation move. Uh, all pretty clean. Shakeout starting to improve, minus 6 range, so not horrible. I mean, it can get to the positive side. That all started from that extreme histogram, moving from uh, magenta to the green. So those are the things we look at, and all pretty consistent within that play. From a treasury standpoint, you're starting to see the Fed providing liquidity, on the backside with their open desk and the swaps. So there's starting to be some credit. There was certainly some damage from that whole crypto nightmare and everything, and it's playing itself out. You're also seeing extreme credit situations with Tricolor and some of these other ones that were lending at the extremes, and those are always the first ones to go. The same thing happened back in 2007, so they're going to be on top of it quickly. Um, you know, will the cascade go? No, well, because we saw that manufacturing things like that are starting to see their improvement that is built up over these many months of the changes in policy and that, and that's like again, said it's not going to have its full effect until next year, but it's moving in the right direction, and that's all you could look for. This is that. Trump wasn't wrong on that. They talked about the short-term pain that was going to take place in the interim until that finally built up, and it's probably going to start, as I thought, first, second quarter of next year. First quarter would be optimistic. Second quarter more likely. When you look at it from an oil standpoint, you're below the range that we had been at. If we can get any further decline from there, well, you're looking pretty good from a growth standpoint. Certainly going to put an abatement on, inflation rate, definitely. There's still super excitement in the euro because they still think the U.S. is collapsing and all this, when it's actually the U.S. dollar that's backstopping all these other countries that are really in a whole lot of trouble. And we creep closer to my 4,400 target for gold, and at that point we'll make a new assessment as to where it will go from there. But sure, this is where some of these people talk about their relative strength index and all these things and how it's overbought, and they just don't understand what overbought really means. Overbought would be a significant situation if you had selling taking place within that rising of price, and you're not seeing that. What you're seeing is more money coming into it, which that doesn't make it overbought. That just makes it a new desired commodity. We see this in our cyan under red. And when you look at that from a gold standpoint, none of that's changed. All we're getting is variance between whether you have DOC steel here flipping below negative 13, which is a little bit of softness, and then as soon as it turns back above it, you have continued push to the upside. And it's very straightforward. Can it be frothy? Sure. And can it go for very long periods of time? Absolutely. Because even as we pointed out with the positive extremes we saw from the ES, filled all the way back into September, in the single 1 day dip, off some comments. And that just shows how scared players are in between. But there were simple calls where we had our MBI white spike. We expected to move to the 50% for Bitcoin, and then as we saw the pop up here, I expected to move towards 0%. Lo and behold, big shot. No, not a shot. It's all very specific and it's all very direct to the readings, and that's the whole point of them, because because it's a forward-looking construct. And from an ETH standpoint, you get the same potential situation. Now you have a rising zero, so the chance that it comes to zero is a little bit less of a decline, but still poised in that same direction. So, people will, continue to banter about what that's supposed to mean, but it's fairly simple, straightforward. From our viewpoint here, we had the MBI white spike that took place there. We had the brief move that did not result in a move to the 50%. At that particular point, I said, yeah, you'll get a rise in there, but that will definitely cause a fillback to come back in place, and it will eventually fill that spot. So sure enough, what happens? We ended up with the short cover rally that spiked all the way through there, and then boom, middle of the day, you hit the breakdown that was right here with the crossover of the magenta below. MBI white was still low. At that particular point, it was a clear indication that you better be thinking of at least taking your gains at that particular spot. When the DOC spread finally took place, which was right over here, and then you moved into across that one. That was the clear sign that it was definitely going that direction. And then the MBI white took the lead, took a couple of bars before, but it finally, not only did it take the 50% of the current 50%, but it also went back to this 50% projection line right there. That's where it hit right there. And then you got magenta turning around back over the top of it. And that was another short cover rally that's taken place. Now you're seeing the same setup building again. And that's going to be another short cover rally until such time as the magenta flips back again. So it's not tea leaves, it's just straightforward in the situation. I have people saying to me, how can you suggest that Bitcoin could suffer any further? It was already huge. It's like, yeah, these things can all move a lot more than you expect, simply because of the misunderstanding that people have and the way they use averages for readings. It's not effective. From an intraday standpoint, this again was about option flipping. You had all those call buyers very excited, everything. Their gamma all got wiped out in the middle of the week. Put buyers then jump in, and then the call buyers flip them around. Option dealers are very happy with that. Keeps everything nice and clean for them, and their books are neutralized. And they go into the final part of the week with the lowest gamma probably, and they're not upset at all. So that's the game. And here you can see the European session to the upside of it slightly, and that's pretty clean. So broadly, still don't see any real major upsets. You're going to continue to have this narrative play where they freak out over anything Trump says or the whole China-Russia thing, and then it's just one half dozen the other. Trump threatening the tomahawks is to try and get Putin back into the table. It's not about supplying them with tomahawks because it's not going to make any difference. Ukraine is losing and losing badly. Europeans can't make up for it. They never could, and they're not going to be able to buy enough weaponry in enough time, even though the U.S. is more than happy to sell it to them for the gains. You have the shutdown continuing. It's not going to end anytime soon. They're really desperate to provide this health care for illegals, which is strange, but ultimately that's what it comes down to. And then you have judges blocking whether Trump can permanently lay off the people that they'd already given notice that they could be fired because there's no money to pay them, but somehow you have to keep them even though you can't pay them. Okay, and all these legal battles and that, they're just delay tactics. Before they tried impeachment all the time, and they realized that doesn't work so well in this case. So now using the legal recourses, no matter what judge they go to, they get exactly the affirmation that says, you are going to be delayed. They seem to get overturned. I mean, Trump's got a huge win rate in the appeals, but that takes time. And that whole delay just continues to create more confusion. And it makes it difficult for the market in some cases because they just don't know what to expect. And they think that things are uneven. And the same thing with the China situation. They're going to make a deal because it's in the interest of both sides. The question is, who's a better negotiator and who's going to roll over, and you're going to take that to the edge. It's no different than any other union negotiation. You put pressure until one side, feels a little more pain than they can handle, and then things get resolved. It's all fairly straightforward stuff. I think people tend to panic over a lot of nonsense for no particular reason, but hey, that's the state of things. And you just can kind of sit back and look at it from the, you know, high altitude view, and then it's not so complex when you have the overview of it. It's a lot of the noise that people get caught up into, and it creates a hurricane whirlwind for them. If you're above it, you're just looking at it and saying, okay, it's a nice pattern, so we'll just follow it. And that's all we're doing is following the pattern. So continue to work with it like that, and just continue to follow readings and give you these, inside details on, what those relationships mean, because that's what it's about. Each of these representing a relationship and how they impact one another. But you notice here too, critical element is you're going to have to see a shakeout that builds past this previous high for it to be a congruent high. That's a 30 on the reading. Currently, we're at 17. So it's got to continue, which means you're going to have to bust into much higher highs to continue that shakeout. And if not, you're going to end up with higher highs at a lower shakeout reading. And we know what that's going to lead to. At least looking at it from this 5K one, from the basic standpoint. So just continue to follow the readings as they are. I mean, it's pretty straightforward from that standpoint. And as always, anything relevant, I will put it on our team chat. But have a good one. Trade well. We'll talk again later.